Frances, I would, thinking, oh my gosh, high import prices, the CPI happened, we have trade issues, laundry equipment prices are up. What's going on here?
Well, right now this number is a little bit backward looking. It's looking in June, but moving forward, import price data and that PPI data we got on Wednesday is going to start to take on a lot more economic focus. Markets are going to have to pay attention very closely. These are the numbers that are what I'm going to call the canary in the coal mine. They're the ones where we're going to see the impact of tariffs filtering through to the economy. They're going to show up there before they show up in the CPI. Now, the fact that import prices are not as strong as we would have expected right now, that's good news. That means we're starting from a lower base. It might be just a little bit easier at the margin now to kind of take on some of that tariffs in this particular data point.
What's interesting is that you take a look at where prices fell. So capital goods prices fell, auto prices fell, consumer good prices fell, and prices of imports from China were unchanged, up just 0.5%, the most that we've seen since May 2014.
Well, that just goes to show that so much of what's happened in the last 2 weeks, this escalation in trade tensions, we're not going to see that in the data for another month or two, and possibly even later. So this big chunk of new potential tariffs on 200 billion of Chinese imports, that's not going to show up until Q3 and Q4. What it kind of means is that a lot of the economic data we're going to see in the next few months is going to be backward looking. It's going to be considered stale, and it's not going to be helpful in telling us, well, what is the economic impact of this trade wars moving forward?